Good morning. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Wow, look how calm that ocean is still. I mean, it is flat like a lake out there. Absolutely beautiful day. I think it's around, 69 degrees out there. Lovely day. And again, look how calm and quiet it is out there. Not even a person on the beach right now, which is pretty amazing. And pretty much describes the entire internet and social media platform. Quiet. And we all know why. I'm not going to discuss that because there's lots of people on YouTube that are pretty angry and going to discuss that kind of stuff. What we'll do is we'll discuss precious metals today. And suddenly it's back to normal, and that's exactly what we're seeing with gold, silver, and platinum prices today. And then, as of last night, I started to see things kind of move up after the last few days, or the hammering that we kind of got last week. I'm not sure if we got really hammered last week or the price just went up too much. Remember, we had that $100 rise in the price of gold almost like overnight, about a week and a half ago or so. And then we kind of gave it back, most of it. It just kind of went real quick. I've got my reasons why I think that happened, and I think it was very healthy that it did back off. Again, as I always say, it provides the opportunities to buy the dips. But we'll get to the gold prices very shortly here. I want to talk about something that has a direct relationship with the price of gold and silver, and mostly gold and silver, but platinum too, I guess, because gold is the leader of those two metals. Where gold goes, silver and platinum will eventually follow. And what is that? That is the reason that we are getting higher prices in gold and silver. It's called Gresham's Law. More or less, it ties in with fiat currencies. And let's discuss this here. Here we go. Gresham's Law, and this is off of Investopedia. I like Investopedia. Better than Wiki when it comes to financial and economic stuff. And here we go. In cases of hyperinflation, now Gresham's Law originally kind of referred to like gold coins, silver coins, and copper coins. For example, when a country has gold coins circulating as their money, and then all of a sudden they start to try to slowly replace those gold coins with gold-plated coins. You know, what happens is everyone will spend the gold-plated coins, but they'll keep the gold coins for themselves. So basically what that means is, as it says up here, Gresham's Law is a monetary principle estimating bad money drives out good money. So as I said, it originally applied to gold coins, silver coins, and that kind of thing. And what happens is countries would eventually go broke, so they'd reduce the amount of gold or silver in a coin. And what the public would do is they say, well, I'm not going to spend the one that has the most gold and silver. I'm going to hoard that one, and I'm going to spend the one that's cheaper and pass that along because it's valued at the same level, as far as, it's becoming fiat currency. And that's where the term bad money drives out good money comes from. Key takeaways, but this talks about key takeaways. Gresham's Law is that says legally overvalued currency, i.e. fiat currencies, and I guess you can include cryptos with that now, will tend to drive legally undervalued currencies out of circulation. Gresham's Law originated as an observation to the effect of metallic currency debasement, again, exactly what we were just discussing here, but also applies in today's world of paper and electronics monies. So there you go. Gresham's Law does apply that. In the absence of effectively enforced legal tender laws, such as hyperinflationary crisis or an international commodity and currency markets, Gresham Law operates in reverse. So basically it's the same thing with currencies. And it explained it down here, which I think I kind of, here it is, legalities, Gresham's Law in the current currency market. Gresham's Law plays out in the modern day economy for the same reasons that it was observed in the first place, legal tender laws. In the absence of effectively enforced legal tender laws, Gresham's Law tends to operate in reverse order. Good money drives bad money out of circulation because people can decline to accept the less valuable money as means of payment and transactions. But when all the currency units are legally mandated to be recognized as the same face value. Now, this is important. I know it's long and maybe complicated, folks, but listen to this. The traditional version of Gresham Law operates. In modern times, the legal links between currencies and precious metals become tenuous and eventually have been cut entirely. With the adoption of paper money as legal tender and accounting entry money through fractional reserve banking, this means that the issuer of the money are able to obtain seigniorage by printing or loaning money into existence at will as opposed to minting new coins. And they're talking about basically just endless money printing and the fiat currencies. In cases of hyperinflations, foreign currencies often come to replace local hyperinflated currencies. So what that means is that, and that we're kind of seeing this today, people looking for replacements for the U.S. dollar. I actually had a customer that's a gold and silver buyer ask me, should I buy Canadian dollars? Well, here's a perfect example of Gresham's law. They're worried that that U.S. dollars are going to be worth less than Canadian dollars, or they're better off putting their money in Canada dollars. But listen, they're all fiat currencies. They're all doomed to fail. The only thing that's not doomed to fail is something that's backed by something, and like gold or silver or precious metals. I'm going to move along here, and that talks about our next subject is how to, oh, by the way, highly recommend you read this, Gresham's Law. Go to Investopedia, read this, and I'm telling you why I want you to read this rather than me just telling you all this stuff. I want you to read this stuff as well, because I can't read the entire thing to you, and I think that by reading this, you'll become a much smarter a buyer and seller. You understand what's going on. You understand money probably not better than 99% of the population does out there, including the people that run the system. So if you read this stuff, you'll be smarter than them and smarter than the average bear. So, but I'm going to kind of just touch on some things here, and I'm going to try to do it fairly quickly. I'm going to go into what next I'm going to go into. I'm going to Investopedia, of course, how the U.S. dollar became the world's reserve currency. So we were just talking about fiat currencies and the problems with Gresham's Law, and that all countries and all empires in history to date have failed when it comes to creating money that's not backed by anything. Under the gold standard, we were doing very well. Most countries do very well until they decide to go to a fiat system, and then it's just a decline until it eventually evaporates and go to nothing. U.S. dollar is the longest surviving fiat currency in history. And how the U.S. dollar became the world's reserve currency, again, read this on Investopedia. Make sure you read these articles that I'm giving you because, again, they'll make you much smarter. Trust me on this. Key takeaways. The first U.S. dollar, as it is known today, was printed in 1914 upon the creation of the Federal Reserve Bank. The Federal Reserve basically took over the system. Private bankers, you can read into that. I mean, there's so many little stories here you can go off to, and maybe we will at some point, but we don't have the time right now. So I'm going to go over the takeaways here. During World War II, the U.S. supplied the Allies, and this is important, the U.S. supplied the Allies with war equipment, food, clothing, you name all the things that our manufacturing could produce for Europe and our allies. And we got paid in gold, propelling us to the U.S., to the largest gold holder in the world. Now, this happened during World War II. They were fighting a war. It was draining. Now, does this sound familiar, by the way? Fighting wars and draining the people and draining treasuries. Yes, it does sound familiar. That's what happens when empires get too big for their pants. Well, anyways, we were not in anybody's wars. I mean, the United States at the time, prior to World War I, we kind of kept out a lot of stuff, which was the smartest thing to do. It's good for us to stay out of certain things. You know what I'm saying? So we were out of a lot of wars, and manufacturing base was really good. We didn't get destroyed in World War I like a lot of Europe did. So we were doing pretty well. So we were able to provide goods in that war for World War II, and we got paid heavily for it. For that reason, we created the Bretton Woods Agreement. After the war, and we'll get into that in a moment, after the war, countries linked their currencies to the dollar, which was linked to gold. The gold standard ended, but the dollar's reserve status remained. So the gold standard did end, more or less. Nixon ended it in 1972 or 71. So we basically were off the Bretton Woods Agreement entirely by that point. We violated the agreement. However, because we were for so long, from World War II all the way up to 1971, the world's reserve currency, as agreed to by the Bretton Woods Agreement, which we'll get to in a moment, we were the top dog. So even though we weren't on the gold standard anymore, most countries decided to still keep the dollar as the, peg their currencies to the U.S. dollar. Somewhat. They weren't legally bound to that, but somewhat. And the dollar, it was still the reserve currency. Even till today, it's still the reserve currency, no matter what anyone says. But less and less and less, and more dangerously not so. And we'll get to that in a bit, too. Today, more than 61% of all foreign banks and reserves are denominated in U.S. dollars, and that's exactly what we were just talking about. And nearly 40% of the world's debt is in dollars. So, we are the top dog as far as fiat currencies that aren't backed by anything. So we are the, again, as it says up here, we are the reserve. We are the, well, basically, the world relies on the dollar. And that's not a good thing, and we'll get to that too. Understanding the birth and rise of the U.S. dollar, you really need to read this, folks. Please read this stuff that I'm showing you here. How the U.S. dollar became the world's reserve currency. It's done by Investopedia. Nice job, Investopedia. Now we're going to go to the Bretton Woods Agreement, and we were just talking about how the dollar became the world's reserve currency. Well, a lot of this had to do with the agreement that we made with the Allies after World War II. We had all this gold. Our country wasn't directly impacted by World War II. Other than Pearl Harbor, our factories survived, our business survived. We were thriving. This is what created the United States to be the large empire we are today. However, we weren't smart with it. We haven't been smart with it. We've tossed away a lot of it. We got greedy, more or less. Or I should say our politicians got greedy, and the corporations that are in bed with politicians got greedy. So here we are today. But anyway, the Bretton Woods Agreement and system created a collective international currency exchange regime that lasted from the mid-1940s to the early 1970s. And to this day, the Bretton Woods Agreement did end when Nixon took us off the gold standard. And there's an interesting story behind that, because France immediately said, you know what, we want our gold back here. Here's your dollars. We want gold. That's when Nixon, and the reason France did that the reason Nixon closed the window is because the French were looking at us in Vietnam and saying, listen, you guys are just spending way too much money. You're not being real responsible here. We're going to start cashing in our dollars for U.S. gold. That freaked out Nixon. Nixon said, you know what? Oh my gosh, they're going to, once France starts to deplete our gold supplies, all the other countries are going to want to trade in their dollars for the same thing. So Nixon basically said, no, guess what? We're keeping our gold, and we're going to make it so the dollar's not backed by gold anymore. So even if you want to get it back, you can't. So the whole world was in shock and awe, more or less. France did get back some of its gold, and anyways, we reneged. But by that time, it was too late. The world was using the dollar as the primary currency. Again, it says the Bretton Woods system collapsed in the 1970s, but created a long influence on international currency exchange and trade through its development of the IMF and World Bank, which is dollar denominated. That's why most of the world, as we saw in the prior article, still uses the dollar. Again, I'm going to just go over this because this could go on forever. This could be a long report, and we got to talk about gold and silver prices. So read this article, please. Bretton Woods Agreement and System, done by Investopedia. Again, great job by them. So let's get into a little news here. Russia holds more gold than dollars for the first time in history. And this is what we were talking about. Even Russia would hold U.S. dollars. Even when they didn't like us, even when we were in the Cold War, the Russians, I'm sure, had dollars stashed away because it was the world reserve currency, and they trusted us. No more for a couple reasons. First off, the rest of the world, even though they're still using the dollar, and a lot of debt is denominated in dollars, like we read in the article a little back here. The next big mistake that the United States made, besides coming off the gold standard, and spending too much, way too much, and that was the reason we came off the gold standard, we were irresponsibly spending, which we are continuing to do today, thanks to fiat currency, which they can continually print over and over and over and over. But anyway, I digress. The next big mistake the United States made was the world was still happy after we entered the gold standard to use dollars. They said, what the heck, you guys, we'll use fiat currencies. You guys are fiat currencies. We'll create our own fiat currencies, not backed by anything. Meanwhile, we'll still peg everything to the dollar because everyone understands it and still trusts it to some degree. So we'll use the dollar until we decided to weaponize the dollar. Until we start, and weaponizing, what does that mean? That means telling a country that if you don't follow our rules of the things that we want you to do, we will starve your bank of U.S. dollars. We will starve your people of U.S. dollars. We'll make sure that you can't use our dollars. That was called weaponizing the dollar. And that's what we did. We did it to Iran. We did it to Iraq. We've done it to every country we don't like or we've had issues with. We're doing it with Venezuela still to this day. And we did it with Russia. Except the big empires, they're not like Venezuela. Russia basically said, you know what, you're going to screw with us. You're going to weaponize the dollar, lock us out, and screw our economy up by blocking us from using dollars. Again, which is another major violation of the Bretton Woods Agreement, or the agreement that we would be the world currency and be cool with it and take care of everybody and not weaponize it. So Russia basically said, screw you. We're going to add to our gold reserves. We're going to get more gold, and we're going to get rid of your dollars, which makes for an interesting, where is it? Russian central bank was aggressively divesting itself of U.S. treasuries. And why were they doing this? Because, again, we weaponized it and we kept threatening to use it against them. And I can't blame them. If someone did that to our country, we would do the same. We'd say, screw it, we'll go on our own. We don't need to be held hostage by you. So anyway, the Russian central bank was aggressively divesting itself of U.S. treasuries. Russia sold off nearly half of its U.S. debt in April 2018 alone, dumping $47 billion and $96.1 billion in U.S. treasuries. Wow. And that did not help our economy at all, because where does that money come back to? What were we talking about earlier? Where is it? Gresham's Law. There's a great example of Gresham's Law. The Russians said, screw it. We're going to send you back your fiat paper dollars, and we're going to keep our gold. Sound familiar? Familiar? Gresham's Law. Right there. Perfectly. So that's basically why we are where we're at today, with a declining U.S. dollar and a fiat currency that is eventually going to fail, or just add some zeros to it, or just buy less and less all the time. And oh boy, the phones are ringing already. Okay, we're not quite open yet, but anyways, let me continue this report. So we did this with a lot of countries, and think about China too. We have of recent weaponized the dollar with China and weaponized our economy with China. That I understand somewhat, but without getting into whether it's right or wrong to do, this little tit for tat we've got going on with China, I think to some degrees it's right. I think a very oppressive regime over there. Social credit system is atrocious. I can't believe people operate under that kind of. However, it's looking pretty scary in this country right now too. I wonder if some of our people in Washington, D.C. are taking hints from the CCP. But anyway, let me move away from that, because we're talking about debt. Here's another thing. China owns about $1.1 trillion in U.S. debt. That's huge, folks. And whether you're an American retired or Chinese bank, American debt is considered a sound investment. This is exactly what we were talking about. That's why even the Chinese, who probably would like nothing more to get rid of all the U.S. dollars and burn them if they could. However, hey, they know it's a sound investment. Out of all the world currencies, including their own, they want to keep U.S. dollars. However, how long will that last? The Chinese at some point are going to start, and they already have. They're not really doing a lot of reporting, but the Chinese are starting to lay off treasuries already. They've been doing it for the last 4 years. At what point, when they completely want to divest of U.S. debt and put it into gold or something else that's Gresham's Law again, or a currency like the dollar that's not being weaponized against them, they're going to divest of that stuff. And where does that come back to? It comes back to us, folks. We are going to be the ones that are going to be eating that. And what does that mean to us? Hyperinflation on a large scale. And this is a result of our politicians in Washington, D.C., and officials and a media that does nothing but, paint narratives instead of educating people. Hey, and that's why I'm here. I'm here to educate you. Hey, let me move along. We've learned a lot about what's going on with the dollar, and we know what fiat currency is because I talk about it all the time. And if you don't, look it up. But the last 10 minutes that we've discussed here about Gresham's Law, how the dollar became the world's reserve currency, the Bretton Woods Agreement, Russia divesting of dollars and holding gold instead, and China looking to do the same. This all has to do with the price of gold and silver and precious metals, because as the dollar declines, gold and silver holds its value and will continue to increase, or at least hold its value versus a currency. Well, let's talk about another two fiat currencies, again, the dollar and cryptocurrencies. Sorry to say this, but I've been talking about it for some time, and you gentlemen that have made good money in cryptos, man, I'm proud of you. I think you've done a great job. The only thing I've been always saying is that cryptos are not real money. However, as a capitalist, I like the idea of making money on something like that. But I've been saying for a long time, government and banks hate competition, and now we're starting to see it. The SEC, cryptocurrencies, and securities. The SEC has filed a lawsuit against Ripple and two of its executives for offering digital securities to the public without registering securities offerings. So here you go. I think we've already seen some like in China, Bitcoin is illegal. But I think, as I've said, in this country in Europe, they're not going to make it illegal because it's too popular. They'd have a resurrection or insurrection on their hands, and they've already had enough insurrections. So they're not going to ban cryptocurrencies in this country or Europe. What they're going to do, as I've said over and over and over, they're going to heavily regulate it. And then the whales can really dominate the crypto markets, which they already are right now in an unregulated market. But now, like I said, it's only a matter of time before government and banks regulate the hell out of bitcoins and cryptos, and then where are you at on that? I like gold and silver. It's in your hand. It doesn't require electricity or internet, so I prefer to hold gold and silver and platinum. Even though I think if you can play and make money in cryptos, man, that's good. Go ahead and do it. But it is risky, and I see no risk in holding gold, silver, and platinum as long as it doesn't get stolen from you, and you don't plan on dying this year. I see no risk in holding gold, silver, and platinum at all. Period. That's my opinion. On to another fiat currency, the U.S. dollar. Now this is very odd. Metal prices went up, and I've been saying for the last several months or more that there's a direct inverse relationship with the price of gold and the dollar. If you laid an inverted chart of gold on top of the dollar, it would fit in these little things, except when it doesn't, which happens occasionally, and which is happening today. Dollar strength is up. As of yesterday, well, take it 4 a.m., but look at that. Look at the strength here in the dollar. Why is gold and silver up? And platinum, I just don't understand it. These are those days where it completely diverts from the norm, and the norm has been for an inverted gold chart to fit exactly into this. But today, dollar is up, but gold and silver and platinum are up as well. A little confusing to me. I'll try to figure that out. If I do, I'll let you know in tomorrow's show. Well, this has been a long one, so let's get on to gold and silver prices. Wow, take a look at this from yesterday. Like I said, the dollar is up. This doesn't make any sense to me. If you guys got any thoughts, put it in comments below. Meanwhile, I'll try to do a little brainstorming. Oh, and there it did. It got hit another $5 since I last refreshed it. But we're still up in that 1850 and beyond range. We were looking at in the 1840s yesterday. And again, with the dollar strength, with dollar, stronger this morning. Again, remember, dollar strength is only temporary. It'll last a day, it'll last a week, it'll last maybe a couple weeks, but not for any length of time. It is in a decline and will continue to be. And again, we just discussed this about Gresham's law and currencies. So remember what I'm talking about: long term, not short term. The dollar's in the dumper. It's got to be, and that's a historic. That's where it's going. So again, with dollar strength today, it's kind of diverged from where we've been. Usually when we've seen dollar strength, we've seen weakness in gold, silver, and platinum, but not today. We're at 1855. 1863 was a high, and again, that's pretty odd considering. And 1850 was a low. Yesterday, we were in the 1840s somewhat. And look at silver. Silver holding on to that $25 mark quite nicely. It's kind of surprising. If anything, we can say we built a base in silver that's definitely above 20. I'm not going to say exactly where it's at, but definitely above 20. And I think we're definitely built a base in gold that's above 1800. By the dips, as I said, but overall the trend looks like it's up. Platinum doing its own thing. It's completely diverged. Look, again, platinum up $8 while these two metals are down. So I'm not quite sure what platinum's reacting to. It eventually will always follow the price of gold, as will silver. But platinum on a day-to-day basis, even on the last couple of weeks, it's just been doing its own thing. Not quite sure what's going on there. Again, if you know anything or you know more than I do, please make a comment below. I'd love to discuss it. Hey, what's the best deal out there? Gold, silver, and platinum. It's still Krugerrands, and it's still constitutional U.S. 90% silver that is made by the U.S. Mint. You can get it anywhere from 85 cents to $1.60 over the spot price. And in Florida, there's no sales tax no matter how much you buy. Even if you buy $2, Florida sales tax exempts U.S. monies. And Krugerrands, best deal out there too. Even though there are some better little esoteric deals out there, which if you come in, we'll tell you what they are and you can save some money. But across the board, and a popular product that's made millions and millions of them, Krugerrands the best deal out there. So this is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call us anytime between 10 and 4, Mondays through Fridays at 954-493-8811. Happy to answer any of your questions and give you spot prices or, try to teach you a little something like I do here in these videos. Although it is tough to do on the phone, but come on in and visit me. I'm usually here. Hey, thanks for watching. If anything crazy happens today, I will update and do another video. If not, we'll see you tomorrow. Have yourself a wonderful day, and hey, relax. I know the world is crazy right now, but there's not much we can do individually. But as a whole, at some point, we'll make it better. Talk to you later. Have a good evening.